Welcome out to the Blue Sky Trading Lab, ladies and gentlemen. This is Coach Matt. We're going to be working on a technical pattern today that I find to be absolutely fascinating. In fact, one of my favorite technical conversations is, and don't get me wrong, I love all technical conversations, whether we're talking reversals like we did in the last couple weeks, continuation patterns, whether we're talking momentum, loss of momentum, candlesticks, pattern development, you name it, moving averages. I love all things technical analysis. But one of my favorite conversations that we have technically, because there's a little bit of art to it, there's a little bit of science to it, is navigating pullbacks, whether that's the bullish pullback, i.e. the bullish retracement, or whether that's the bearish pullback, i.e. the bearish retracement. I just love the concept of a pullback. It was the first technical pattern that I absolutely felt comfortable trading for the first time. In fact, let me ask you guys a question. Everybody has to answer. What was your favorite pattern when you first started trading? And if that's right now, just tell me the pattern you love. There's a lot of them. There's a lot of different patterns out there, guys. Tell me your favorite pattern that you love trading right now or when you first started trading. Because when I was a young trader, I was taught two basic patterns to start: the breakout and the pullback. Those were the two patterns I was taught to trade when I first started. Now, what is a breakout? I think we all know what a breakout is. Market establishes a key level of resistance. Market then breaks out of that resistance. That is a breakout. Well, a pullback is as the market broke out, it starts to pull back down to the breakout channel or a key level of support or whatever the case is, and you're looking to pick it up when it pivots when it pivots going back up. And so I always felt like the breakout was not for me early on, because I felt like it was like I'd already missed it to a certain extent. I always felt like, well, I could have got it in it 2 days ago and now it's breaking out today. Well, I kind of felt I missed it. That's not true, by the way. That's just how I felt when I was a young trader learning breakouts and retracements. But I fell in love with pullbacks because if you miss the breakout, let's say you had a beautiful reversal formation. We're going to be doing some whiteboarding today. You have this beautiful reversal formation coming from the low point, right? And it breaks out and it rocks. And let's say you miss it. Well, at some point, you know it's going to pull back and you know where it's been in recent history. And it's a really easy trade to kind of process. As the market starts to pull back, you wait on your pivot point, you enter in right above the candle high, you put a stop loss right underneath support. You're going to T1 at the pivot point, you're going to target 2 at an extended target. I always felt very comfortable navigating that pullback type pattern. Now, breakouts, I prefer a breakout today. Breakouts are momentum based, especially clean breakouts. Beautiful. I'll take a breakout any day of the week over a pullback. But but that's not to discriminate against the pullback. The pullbacks are absolutely amazing too. Now, in a breakout situation, you have a higher probability, but you have a less return. In a pullback situation, you have a lower probability, but a higher rate of return. And so there's always going to be a give and take on every technical pattern when you're talking about through the lens of probability versus reward to risk ratio. The higher probable the setup, the lower the return to risk ratio. The lower probability the setup, the higher return threshold that you can potentially get. Now, when I was a young trader navigating pullbacks, I only navigated it through the lens of what goes up must come down, and what comes down will typically come down to a 50% Fibonacci zone. And when I get my pivot, I'm good to go. Well, obviously there's different levels to retracements. So let's first talk about Elliott wave theory, spend a couple seconds on Elliott wave theory, talk a little bit about Fibonacci, and then identify the key zones where a pullback could come into. And then what we're going to do, guys, is we're going to go into the market and we're going to look at the market today, and we're going to take what we learned in this conversation on the depth of the pullback, and we're going to apply it to the market today. Because I'm willing to bet that based on what I'm going to say in the teaching of the bullish retracement and the depth of the retracement in general, that it will help you navigate that market today and have an understanding of the context of the market a little bit more today. We're also going to look at it through the lens of weekly, daily, intraday as well. Now, I promised at the end of the session today, remember we always leave about 10 minutes at the very end of the session for a live Q&A. So if you have any questions on any topic, anything on the financial markets, you want to get my take on, what's the probability of a recession? I don't care what the topic is, guys. That time is called team time, and that's for you. Any question goes as long as it's appropriate to the market. Now, that's your time, and I promised I'm going to talk a little bit about covered calls there, and so I'll save that conversation for then. But again, any question at that point is your time. Now, when you look at Elliott wave theory in general, all Elliott wave theory is the description of trend analysis through the lens of higher highs and higher lows, higher highs and higher lows. Now, according to Elliott wave theory, the upward movements in prices are what we call motive waves. Once again, the upward movement in price, these are called motive waves. And the downward movement in price, as it's coming down, 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 these are called corrective waves, i.e. the name bullish retracement is called the corrective retracement. That's the actual proper term. Now, most people will consider this a higher level of resistance, otherwise known as a higher high, and this will be known as a higher level of support, otherwise known as a higher low. And that pattern will repeat itself over and over and over and over and over until something changes in the data to change the trajectory of the trend, and i.e. The pattern, and i.e. the trend. And so we have a series of motive waves and corrective waves. Now, I'm not here to teach about the whole 8-point Elliott wave theory, although if you want to do that in a later lab, I certainly will. What I'm here to talk about specifically is navigating the corrective retracement. Okay, navigating the corrective retracement, also known as the pullback. So let's say the market is going up, 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 and establishes a higher threshold of resistance. And so the market moves up, 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 and establishes that higher high of resistance. Now, as the market gets overextended, what is every technician gonna say is gonna happen next? What am I going to say? What's Riz going to say? What's Steve going to say? What's Mike going to say? What's every single coach at BluSky going to call for next? What do you guys think? Right at the higher high, what are we all going to say? Are we going to say keep pushing it? Are we going to say just buy because it's going to the moon? What are we going to say? What do you guys think? I'll give you a second to Excel, you're 100% right. We're going to say wait on the pullback, right? Wait on the pullback. Because if you miss the breakout, you shouldn't chase the price. You shouldn't chase the price. Price doesn't go up forever. Price doesn't go down forever. Price moves in a series of waves and patterns. And so we're going to say wait on the pullback. And that's where I fell in love with pullbacks, because I always felt I was a little bit either too early on a breakout or too late on a breakout. And again, I'm talking about when I was a young trader, the first couple of years, I always felt like my timing wasn't great on breakouts. That's something I corrected, but at the time I did feel that. But I loved pullbacks. Absolutely loved pullbacks. Now, you can look to short your 1 minute time frame Ravian if you want. That's up to you. If you want to counter trend trade, that is perfectly viable to scalp a longer term time frame when you're thinking about the pullback. But as for right now, don't you think the highest probability is just to wait on the pullback and buy the pullback instead of short against the market? When you short against the market, you do not have a probable edge. You don't. You're basically saying, I'm going to short while the bulls are. I'm going to be a bear trying to make money while the bears. Think about it like this: when you counter trend the primary trend, what you're saying is, I'm going to try to make money while all the bulls are locking in their money, right? And so you certainly can do it, Ravian. I'm not trying to convince you not to. That's an appropriate thing to do. But as long as you know exactly what you're doing, meaning you know exactly you're scalping against a longer term uptrend for the day traders. And as long as you know that, I'm perfectly fine with it. And by the way, the reason I bring it up like that as a disclaimer, Ravian, is not because I'm questioning your short the 1 minute time frame on that. It's because there might be newer traders who shouldn't be doing that. Does that make sense, guys? That's the educational disclaimer in me. When I see something that is appropriate, like what Raven said is appropriate, but for a new trader, should they ever go against the trend? A new trader. I'm just going to ask you guys that general question. As a new trader, should you ever go against the trend? Never, never, never. Now, even as a veteran trader, guys, I typically won't, right? I typically won't. I will tell Raven I have a tendency to do that every now and then as well. It is appropriate, but for the most part, guys, you set the trend, you trade in the direction of the trend, and in times where you need to see pattern development, be patient on that pattern development. And what I would advise is, if you don't have the patience on in pattern development, increase the asset classes in your day trading arsenal so that you can move to a different asset class that you're not waiting on development. See, scalpers, guys, scalpers don't wait on development because scalpers are trading such different time frames, such low time frames. They don't wait on that same degree of development that a day trader or a swing trader will have to wait on. And so, what has helped me in my life as a trader is, when I'm waiting on the development of something, I will move to a different asset class, quite frankly. And that's why I like going from, say, my primary asset class, which is the ES on day trading. I'll go to oftentimes gold, GC. I'll even go to the euro dollar, while I'm waiting on different pattern development on other asset classes. But in general, once we establish the higher level of support, or excuse me, of resistance, it's our job to wait on this pullback. And the ultimate question in a pullback, so let's just kind of type it up here. Navigating the pullback. Now, the ultimate question in every pullback situation is, where does that pullback stop becoming a pullback? Have you guys ever asked yourself that question, by the way? At what point is it no longer a pullback? At what point are you seeing something different? Are you seeing something else? Now, every technician is going to have a little bit of a different answer there. Even sometimes I have a little bit of a different answer there. Well, think about it like this, XO. For a pullback to exist on a 1 hour chart, aren't you inevitably breaking some degree of support to pull back? Like, I'm not saying it's a major support level, but aren't you breaking some degree of support just to pull back at some level? And so the way I navigate this from a logical perspective, because in a pullback, we're waiting on the pivot. Okay. So in every scenario on the pullback, we're waiting on the pivot. The pivot is the change of direction. It's when it goes from being a pullback to a confirmation tradable situation. Now, pullbacks, when you think about it from a Fibonacci perspective, this motive wave ran 100% up. It went from 0 to 100. Okay. So this motive wave went from, we'll just say $100 to $155, just or 100 pips to 155 pips, however you want to categorize that. Now, how I look at the pullback lens, guys, is I look at it through the lens when the pullback starts to pull back, not in progress. We navigate at that as well, but as it starts to pull back, what I like to look at is three different zones. Okay, and yes, MJ, I use fibs here too. I use fibs in combination with other things, though, and I'll explain that here in a second because I want to be very thorough on this depth of the retracement conversation today. The first level, and we've talked about this before, but the first level I always look at is what I call the shallow retracement. Now, a shallow retracement can and let's think about this from a support perspective, because when you say I use fibs, that's kind of, let's think about this from a support perspective. In a shallow retracement, the typical path of a support level that equates to getting a pivot. Now, first and foremost, a shallow retracement is also known in this scenario as a flag. So do you see where, like, Riz in the stream, he'll draw his patterns, and a lot of times he loves trading flags. To me, that's the shallow retracement. So when you use the word bull flag or just flag in general, shallow retracement, they're all very, very similar. Now, on the shallow retracement, i.e. flag, the support level that I'm looking for is the 9 EMA combination with a 23% Fibonacci pullback. So the shallow retracement is typically, and again, I want to be thorough here, is typically, oh, what'd you do? Why'd you do that? Is typically, that's the support level, the 9 EMA slash the 23% fib. And it's usually somewhere between 3 and 5 candles. Okay, in development is typically what we're looking at on some degree of short-term scenario. Now, the second zone that we track for pullback analysis is what you call the standard retracement. Now, the standard retracement is, typically speaking, the 20 period SMA. There's a lot of moving averages that would equate to that one, but somewhere around the 20 period SMA. And the typical zone on the Fibonacci would be a 38 to 50% Fibonacci retracement zone. And so on the standard retracement, you're looking at the combination of a 38 to 50% Fibonacci pullback in conjunction with the 20 SMA, typically, not all the time, depends on the time and the volatility. Now, the third level I track, so basically, ladies and gentlemen, as the market is pulling back, say 23%, okay? As the market pulls back 23%, if it doesn't pivot, but it comes all the way down and continues to come down to, say, the 50% level, that's the second level. And then the third level as it comes down is what we call the deeper pullback, and that comes down to about right there. Now, and yes, we will go to an example here in just 1 second. Just 1 second. I just want to kind of identify the levels, the patterns, the Fibonacci levels, so that when we go into the market and we do some case studies, we can now have an understanding. Go, right, is that a shallow pullback? Where's the standard pullback? Where's the deeper pullback? 100% we'll do that here just in 1 second from now. Now, on the third level I track, this is called a deep retracement. Okay, it's called the deep retracement. Now, the deep retracement, typically, I like to look at the 50 SMA, and that is a 61% Fibonacci pullback. It can go up to 75%, but at 75%, it sometimes gets a little too deep, honestly, to be considered just a pullback situation. So, but it can do it. I track the 61% level. Underneath that, I feel like it gets a little bit too deep. And typically speaking, I'm not looking for a pivot. I'm looking for what I call the king's bed pattern. Now, what it really is consolidation and then a break back up is basically what the king's bed is. And so as the market is pulling back to the 23% fib level to the 9 EMA, now let's talk about very quickly type of confirmation. Because and I want you guys to think about this for a second. Do you need to see something different at different levels, or do you need to see the exact same thing at different levels? Like, does it matter to you at different levels, or do you need to see something different? Like, if a pullback comes to this level right here versus this level right here, are you trading it identically? I need to get some answers on this one, guys. I will wait. MJ says yes. Who else? Okay, Cindy says I'm not sure. Raven says yes. Let's get more answers, guys. I'm not here to lecture. I'm not here to lecture, guys. I'm here to teach. To teach, I need to get responses. I need to get participation. If I don't get participation, I don't know if you guys are understanding, learning, or whatever the case might be. And Nacho, if you're lost, what should you always do? Say you're lost. Let me know. Because if you don't know, I need to explain it differently. As an educator, it is very important for me to make sure that you guys are following it so that we can build building blocks. Because if you get a little bit confused on one technical data point, the other technical data points become more confusing. And a lot of times, guys, it's a quick, easy fix that we're getting stuck on. And so what I would suggest and what I would expect in this lab to do every single week is to bring those questions, ask those comments, ask those questions. Let's have a conversation here. Because oftentimes I don't know you're lost, Nacho. And if I don't know you're lost, how the heck can I find you? Does that make sense, Nacho? And if you don't know, it is never a bad thing to say, I don't know. That's never a bad thing. Now, as a trader, you would think you would process them similar, correct? Would you all agree with that? Just our base instinct as a trader, you would think to process them identically, right? A pattern is a pattern, a trade is a trade, a trend is a trend, a resistance is resistance, support is support, right? That's typically the case when it comes to breakouts. That's typically the case when it comes to breakouts. Some breakouts are higher quality than others, but if something gets broken out of, like there's really only one way to process that. Like, are you going to take the trade or not? That's how you process that. But on the pullback, you got to think about it like I said early on. There's as much art here as there is science. See, the science, the logical, the rational side of me says, no, you should process a shallow pullback the exact same way you process a standard pullback, the exact same way you process a deeper pullback. And I would say 20 years ago, that was probably an accurate statement. But in the world of algorithms, you can't because the deeper things go, the more oftentimes those shorter duration moving averages start really impacting the resistance levels. And so I want to talk a little bit about the type of confirmation because I oftentimes sit in the stream with Riz and I talk about what I need to see in a certain technical pattern. And it oftentimes feels like, what do you mean you need to see confirmation? What do you mean you need to see a reversal? What do you mean you need to see a pivot? And so I want to explain that very quickly. When you're dealing with a shallow pullback, and let's take these off here for a second. When you're dealing with a shallow pullback, so the first level of the pullback, the only thing you need to see is what I call simple confirmation. So a shallow pullback, so our first one, the only thing I need to see is simple confirmation. Now, what simple confirmation means, guys, is it means it just has to go above whatever level you've identified, whether that's a candlestick high or a significant whole number, whatever level you've identified on the pullback, it just has to get above that level. That's it. If you get above that level, you're good. The reason being, and there's logic to it, the reason being is if you have a standardized trend and you only have a 23% pullback, that's a momentum pattern. That means all you have is bull on bull stuff here. That is a momentum pattern, and I want to get into it as aggressively and as fast as I can. Does that make sense, guys? So I don't need to see much. I just have to see it get simple confirmation, meaning I just need that upward movement in price to achieve my level. And usually I'm a candlestick guy, so it's going to be against the high of the candle. But once again, the thought process here is in a shallow retracement on the confirmation, I don't need to see much because I have a momentum situation. I have a good trend. I have a good pattern. I have a good shallow pullback. The bears couldn't even push it down even 50%. They could only drive it down 20% against the previous wave. That's momentum. And I don't want to miss out on the next momentum, so I need to act fast. That's the philosophy. Does that make sense, everybody? No, Cindy, it doesn't. No. Think about this, like the flag here, the shallow pullback, there's going to be 3 to 5 candles here. And so, Cindy, when we go back into the market, it just has to get above my candle high. That's it. And so it doesn't need to get above the higher high. No, it just needs to get above the pivot candle is what it needs to get above. And so if you were thinking about this like, let's see that. Okay, so we're good. Oh, okay, good. Now, on this second type, guys, the standard pullback. Now, so we don't get this number. Excuse me, I didn't mean to do that. Actually, there we go. I thought I just did the whole thing. Okay, so we don't get this number here, guys, but it comes deeper than this. And so we get our standard retracement. Now, a general rule of thumb, okay? No, on the pullback 3 to 5 candles, Boba. Yeah, I don't want to fix that XO, so just go with me on it, okay? Um, but on a standard pullback, just I want you to think about it like this, guys. The deeper you go, the more the bulls have given up. Does that make sense? The deeper the pullback goes, the more the bulls have given up, which means the more the bulls have to prove for you to get excited about it, which means I don't need to see simple confirmation. I need to see standard confirmation. Now, for those of you who don't know what standard confirmation is, in a simple confirmation situation, you just need to see what? It to achieve a number. That's it, correct? That's the only thing you need to see when we say simple confirmation is to get above a level. That's it. Get above whatever level you've identified, the candle high, whatever level you've identified. It doesn't have to close there. It just has to get there. Now, standard confirmation is very similar to simple. The only difference is it has to close. That's the only difference. You have to have the candle close above the level, usually the previous candle high, not all the time, but usually, for you to achieve standard confirmation. Now, if we see something deeper called the deep retracement, what do we need to see? Not standard confirmation, not simple confirmation. I call it the king's bed pattern. And what the king's bed pattern is not just confirmation. So we got a deeper pullback here, not just confirmation, but a short-term double bottom and then break. And once it breaks, then it's giddy up and go. Now, the reason that I process the confirmation of entry different at different levels on the chart in a pullback situation is very simple. What is the number one momentum indicator in the market according to Coach Matt? I want to see if you guys will remember this. I've said it many times in this lab. I've said it many times in the stream, in Power Hour. What is the number one momentum indicator that you have to take into account in your analysis? I want to see if you guys can get it. I even said it today in the stream. It's the 9 EMA. Good job, MJ. Everybody write that down so you don't forget it. It is the 9 EMA. Everybody write that down. The 9 EMA. I'll give you a chance to write it down. Guys, you write it down so you don't forget it. I need more answers. I got 3 people writing right now. I got 17 people here. Let's get more answers. Write it down. When Coach Matt says something, you do it, guys. Thank you. Okay. Now, the reason that I process the depth of the retracement different at different levels has a lot to do with the 9 EMA. See, when you're just pulling back a shallow, the 9 EMA is going to lag the price. And so as you're pulling back in a shallow pullback, what's it going to hit? The 9 EMA. The 9 EMA is going to act as a support level in a shallow retracement. Now, as it retraces deeper, the 9 EMA will not act as a support level oftentimes. It'll act as a resistance. But because there's not a lot of time between standard and shallow pullbacks, oftentimes standard confirmation gets you right back up above the 9 EMA. But in a deeper pullback situation, the 9 EMA lags those deeper pullbacks pretty aggressively, which means oftentimes you're going to need to see 3 or 4 or 5 or 6 or 7 or 8 candles at the low point of consolidation for that 9 EMA to get down and converge underneath the breakout channel. And so the reason I process confirmation differently than I did 20 years ago, 10 years ago, even 5 years ago is because the market adjusts. And if, as a trader, if you are not adjusting to the market, you're not going to be a trader long time in this game. How long has everybody traded here? How many years has everybody traded here? Is this your first year, 5th year, 10th year? How long has everybody traded? 2 years, just started, Nacho. Okay, Cindy, first year, awesome. Now, how many of you want to be trading in 20 years from now? Okay, that's me, guys. I started in 2005 in a very similar setting that you guys are starting right now. And what I've learned over that 20 years is you can't stay so structured against what you were taught or learned 20 years ago that you think it's going to work in the market today. You have to adjust to volatility. You have to adjust to algorithms. And one of those things that I have learned in that time frame is as the market gives up more and more and more, it's going to need to prove itself out more and more and more. And after 2020, I was not a moving average guy. I just wasn't. But after 2020, algorithms now make up a large percentage of the movement in the stock market, guys. And algorithms are, they might say they're advanced, and they might say they have all these advanced, algorithms and AI and all this. And when I say they, I mean like the hedge funds and the institutions out there and so on and so forth. Guys, they're just moving average based. Like 98% of all algorithms in the market have some degree of moving average to them. And even when you deal with like traditional indicators, they all deal with like average moving averages in them. And so moving averages play a massive role in the identification of momentum, in the identification of support and resistance. And I would say the number one moving averages out there for me, in my experience, utilizing navigating the market from a technical perspective, is the 9 EMA is my favorite momentum-based moving average. In very hot markets, the 5 EMA is an excellent choice. The 13 EMA, I love as well. Those three EMAs I'll use, but the 9 I anchor to, but I will use the 5 and the 13 depending on the volatility of the market. But the 9 EMA is kind of like my go-to in that time frame. On the simple side of the equation, it's more the 20, the 50, and the 200. But the reason you want consolidation in a deeper pullback is because again, this is just a rule of mine. I would recommend you adopt it. You don't want to fight the 9. Just write that in your notes, guys. Hang it next to your computer. Don't fight the 9. The 9 is your best friend. Make sure it's fighting for you, not against you. If you're fighting the 9 EMA, you're fighting an uphill battle. And so I just wanted to explain the logic of why we want the consolidation in the deeper pullback is because that nine's going to lag. And then once it breaks back up, you're now trading with that 9 EMA oftentimes. Now we're going to erase that. And with everything we've been talking about in the first part of the lab here, I want to go in the market here today. And I want to talk about kind of the market through the lens of the pullback. Now, the first market I want to look at though is from a different time frame. Now, how you kind of navigate this is once you've established the fact that you were firmly entrenched in a pullback zone, you track your Fibonacci levels, you track your moving averages, and you track your pattern development at those key levels. That's the process we go through as traders over and over and over again. And these concepts that I'm teaching you in the lab technically, guys, they're consistent on every single time frame, because if you can't take your technical system on a day chart and loosely apply it on a weekly chart, you don't have a technical system. If you can't take your technical system that you're rocking on a 15-minute chart and not loosely apply it on a daily chart, you really don't have a technical system. You have a system designed for unique to you on one time frame, but you are not taking into account other time frames. Now, I want to talk to you about pullbacks through the longer term lens. Okay. For example, we're a bunch of day traders here. That's what we talk about at BluSky. But how many of you are also investors? Who here is also an investor? That you invest in stocks, you invest in commodities. Awesome. Awesome. Do you also have conversations, not as often as day trading, obviously, but do you often have conversations where you're like, I want to add to that long-term investment? Of course, right? Of course. And what's the number one thing we love as investors? We love lowering our overall costs long term, don't we? Like that's one of the things we love doing. Dollar cost averaging, right? picking up a sell-off type thing. Well, guys, isn't that just a retracement on the longer term? Like, for example, there's two stocks I like. There's a lot of stocks I like, but here's two stocks I like. One of them is a company called Applied Materials. Now, Applied Materials is a semiconductor equipment company downstream in the AI semiconductor build out, very similar to ASML, Lam Research, and so on and so forth. Applied Materials is in a bullish uptrend. And if you want to buy the dip, don't you have to be able to identify where that dip ends? Correct? Like, if I want to buy the dip, I don't want to buy when it's going down. I want to buy when the knife hits the ground, right? We don't want to catch the falling knife. We want to pick up the falling knife. Well, guys, if you're going to navigate that long-term question of I invest in Applied Materials and I'm trying to determine when I should add to my position, well, you should navigate that through the Fibonacci retracement pullback lens that we just talked about, because it can be applied on any single time frame, whether you're an investor looking at weekly charts here on Applied Materials. Now, what I want to do is I want to draw my Fibonacci. Now, I want to track the pullback zones. Okay. So here, what do we have? We have a market that pulls back. Do you see this 9 EMA? Okay, I want to show you guys something just so you know. I have the 20. I'm going to take that off. I have the 50. I'm going to take that off. I have the 200. I'm going to take that off. The only one you're going to see is the 9 EMA here. Now, do you see how the market comes to that 9 EMA right here? And now we're starting to see a battle zone at the 9 EMA, right at a close to a 23% pullback. Do you guys see that? Now, what type of pullback is this on Applied Materials? Is it a shallow, a standard, or a deep? It's a shallow. And what type of confirmation as an investor, if you were looking to add to Applied Materials, do you need to see for you to make that decision to add to your investment? Simple. And what does simple mean? It means it just has to achieve a number. It just has to achieve a level, which is typically above the candle high, which means if this stock goes above that candle high, as an investor, should you be willing to add to the position? If you were not at full position already. Yes. So, as an investor, would I be navigating and making the exact same decision process on Applied Materials versus what I would do on a 5-minute chart? Yes. That's technical analysis, guys. If you cannot equally apply your price action philosophies on multiple time frames, you're not doing it right. You're not reading price right, because investors are not different than day traders. Not from a decision-making perspective, not from navigating the market perspective. The same way you love to pick up a dip on that 5-minute chart or that scalping position is the same type of concepts investors go through, ladies and gentlemen. Now, let's look at a different example. Let's look at Ally Financial here. Now, Ally Financial did not battle against the 9 EMA. Remember, let's pull up that 20 SMA. Just to kind of show you the perspective here. Now, let's draw our Fibonacci here. So, Ally Financial, great covered call stock, by the way. Ally Financial, what degree of pullback are we currently in Ally Financial? Are we in a standard? Are we in a shallow? We're in a standard, okay? And remember, we have a philosophy that as regards of time frame, we don't want to fight the 9 EMA, correct? That's kind of a philosophy. I don't want to fight the 9 EMA. Do you see that 9 EMA hugging the top of the price? Because when you give up your momentum, oh man, now you're fighting that momentum. So, what type of confirmation do I need to see here if I was making a decision to add to Ally long term investment? What would I need to see? What type of confirmation? I need to see it close above that 9 EMA right now. Okay. Which is very close to the high of the weekly candle, correct, Boba? Because the 9 EMA is acting as resistance level to the longer term side of the equation. Now, do you see why at this point you need to see different types of confirmation when you're looking at a shallow versus a standard? Can you guys identify that now? One, the 9 EMA is working for you. The other one, it's not. And the reason I wanted to bring up Ally and Applied Materials, guys, is because oftentimes it's easier to see these on longer term charts. Does this conversation help everybody? Are you guys enjoying the conversation so far? Awesome. Awesome. Now, let's move on and let's talk about something that has not pulled back. And for those veterans out there, MJ, yeah, it's definitely a refresher. It's definitely a refresher. But you know what I love doing, MJ, and I know you appreciate it, even as a veteran out there, is we love raising the boats of BluSky, right? We love raising all the boats of BluSky, every single boat of BluSky, because it is our job at BluSky to create traders not for one trade. What we want to do and what we love doing is creating traders over time so that you guys are, in fact, trading day after day after day after day, week after week after week after week, and you're not out of the market. We want to create traders here, no doubt about that. And I hope you guys appreciate the fact that we want to create traders. And if you love the lab, okay, can you all do me a favor? Can everybody do me a favor? Yes or no? If you love the lab, guys, okay, here is a link to the Trustpilot BluSky testimonials. And if you love the lab, I want to do a lot of these labs, but if you love the lab, I would love it if you could take 5 minutes out of your day and go give a nice little 5-star rating. If it's 4-star, just don't go to Trustpilot. Just say, you know what, get better. But if it's 5-star, go to Trustpilot. 5-star only. Okay. So just really appreciate it, guys. If you love BluSky, you love the lab, you love what we're doing here every single week on Thursdays, go tell somebody else about it through Trustpilot and help us build more BluSky traders out there. Love it. Thank you, Nacho. Love you. And I will love you forever. Believe me, I'm going to go check those testimonies. All right. Now, let's come into something that has not pulled back. And let's talk about what you would need to see. Now, the gold miners are on absolute fire here. Absolute fire here. Now, can we all agree that this was the breakout all the way back here? That broke out. Now, this is off 5 bars, 6, 7 bars into the move. Now, is it starting to slow down here? Can you guys see that? Do you see the momentum shifting a little bit here? Can everybody see that? See how that doji, little momentum shift? Can we also agree that if you miss the breakout, you don't want to chase it after 4 more bars to the top side? Like, I love the data-driven traders who's like, I need more data, I need more data, I need more data. And by the time they get like 5 bars into a move and they're like, well, I got my data, so let's buy now, right when the traders start to sell it back to them. Well, guys, you can look at this through the lens of the pullback situation by simply saying, okay, let's see where this thing could pull back into before I start getting excited. And so you draw your Fibonacci, you have your zones, you know the 9 EMA is going to be catching up. That seems like a pretty decent zone at this point, the 5680 level. Your standard pullbacks right around the 55 level. That 20 will catch up to there around that 55 level. And so if I was looking to add to gold, or if I missed this gold run and I wanted to get into the miners here, guys, I'd be waiting on a pullback, and I'd be waiting on that pullback from right here. That would be a flag, to right here at 55. That would be a standard. Okay. So I just wanted to pull up the gold stocks because they're in a little bit of a move here. Now, the last chart I want to pull up. Oh man, that is such a beautiful chart on GDX. That thing might not pull back, by the way. It's showing a little bit of momentum shifts, but it is a beautiful chart. I want to talk about the market through the lens of today because I felt like the market was fairly fascinating today. And fascinating in the sense that I navigated the pullback all day long, waiting on key levels. And finally, at the very tail end of today, we got ourselves a nice little reversal. We got ourselves a nice little upward movement in price, but I felt it was a fairly compelling intraday conversation on the pullback situation. But when you're looking at on this one here, on this current trend, are you talking about going into wave 5? Or are you saying this was wave 5? Like right here, this move here? Or are you saying that one there? Because I agree with you in general. Oh, on the daily. Oh yeah, oh yeah, firmly. 100% agree with you. It's one of the reasons why we're dealing with all the momentum shifts. I agree with you 100%. And it's desperately seeking a catalyst, MJ. Desperately seeking a catalyst right now. Thought it had a couple produced through earnings. Earnings season has been really good. But had that nasty labor market number from last week, and then the tariff conversation keeps ratcheting up, even though we thought we were through that. So there's honestly, I think the market's just trying to digest the recent gains, and I would agree with you in general. Now, let's go into the intraday side of the equation. Now, earlier today, once this market started pulling back, let's go kind of into the short time frames first. So as the market was pulling back here, okay, the market firmly starts that pullback right here. Starts to pull back. Now, on a 15-minute chart, guys, this is the trend right here. That's your Fibonacci's. Those are your pullback zones. But I want to talk about it more against that 1 hour time frame, not just on the short time frame, because I want to understand kind of at what point did things change for me today on the ES. The NQ was a little bit cleaner all day long. Now, as the market initially started pulling back here this morning, you start pulling back deeper here. Now, ultimately, the question here is where is the zone and where do you expect development? And so if you draw your Fibonacci on this 1 hour move here, and then we'll blow it up here. So there's our Fibonacci on our wave right there on the intraday side of the equation. You have a little bit of a double bottom, double top situation there. You go from the low point to the top point. There's your wave right there on the 1 hour trend line. Now, as the market starts pulling back, let's clean this up by removing our moving averages very quickly. So let's get rid of that. Let's get rid of that 9 EMA. So as the market starts pulling back, it didn't sniff the 38 point level. Came down to the 38, smoked it like hot iron through butter. Came down to the 50 zone, smoked it like a hot iron through butter. Came through the 61 zone, smoked it like a hot iron through butter. Okay, little bit of momentum shift, not a tremendous amount. Now, at this level right here, kind of in this zone right here, if you come into like a lower time frame, I'll kind of show you what I was looking at. So I do a lot of my trend analysis off the 1 hour time frame, and then I'll drop it down into the 15-minute time frame, which is my favorite time frame for pattern development, and pattern development specifically is the 15-minute chart right now. My favorite time frame for pinpoint accuracy on execution is a 5-minute chart, but I do a lot of trend analysis in general on the hourly chart. So here's your wave count on the hourly chart right here. We already draw it. We already wrote it up. Now we're just kind of identifying the pullback zones. Now, as the market was pulling back here to the 50% level, it got a little bit of love, but it never got any degree of confirmation. Market pulls a little bit deeper here. And right here, it pulled into the 61% zone. And you start to see the consolidation set forth, but it really didn't ever give any type of edge here. Now, the ultimate question that I typically have when I'm dealing with a pullback, especially as you saw something today where it wasn't really like a standard pullback, it was a volatility driven moment at the cash open, and then that kind of we had a pretty deep pullback fairly aggressively. So it wasn't one of those methodical, lazy pullbacks here. And so when the ultimate question I had today was, because we were at deeper pullback level from when I first started doing any day trading today, we were already at that deeper pullback. Now, I was looking right here earlier today, and I was sitting in a session with a bunch of day traders. And basically, what I said at that point is that, guys, you can't touch it as a bull here. What we need to see, because we're at the 61% level, what we need to see is we need to see a short term consolidation. Just give us, a good 30, 45 minutes of consolidation, right? Just give us a little bit of consolidation. And if we get that and break back up, that's a great tradable signal. Now, once again, my entire thought process was, all right, we're at the deeper pullback zone. What do I need to see? I need to see short-term consolidation followed by an upward movement in price. All right, do I get my short-term consolidation followed by an upward movement in price? Again, I would do that on the 15-minute chart. And right here, we got our short form consolidation, but we never got confirmation. It came right back down. Now, coming back out to the hourly chart, the question was asked earlier in the session, at what point is it no longer a pullback? Well, once here, it got underneath 61, and underneath that trend line, look at the consistent trend line here, guys. That price converged right here at the 61% level. That's why I was like, give us development here, give us development here, give us that king's bed. We're right at the trend line. We're right at that 61% level. Let's get development right here. And if we do, we're sitting pretty. We're right at the trend line. We're right at the 61% level. King's bed analysis. There might be a session in the future where we talk more about the king's bed pattern, but give me short form consolidation followed by that upward movement in price, the same way we were talking when we were drawing it here on the board just earlier in the session. We didn't get that. What we got was a violation of the trend line, a violation of the 61, and at that point you don't have a trend. At that point you no longer have a pullback. At that point, you can no longer navigate the market through a pullback lens. The very second it got underneath this 61% level, underneath that trend line, when it was converging together, you no longer had a bullish uptrend. And at no point should you have been looking at the market through a bullish pullback lens if you're a bull. Now, obviously, people on shorter time frames, 1 minute charts, 5 minute charts, they switched position well before this, guys. I'm talking about that standard day trader that anchors against a 1 hour time frame, not the scalper that anchors against a 1 minute time frame. They'll flip position well in front of a deeper pullback on the 1 hour chart. I can promise you that. Now, once we got underneath that level, it was no longer a retracement situation for me. Which means when we got into power hour, guys, okay, what I was talking about was not a pivot point. I wasn't talking about anything like a pivot point. If anybody was in power hour with me and Coach Riz, what I was talking about was a reversal. Because once you got underneath that level, I can't see the market through any other lens than either a continuation pattern or a reversal pattern. And when you look at the pattern development, okay, let's come back out. Let's erase those. Let's go forward a little bit. So when you look at through the lens of reversal at this point and not pivot, You just go through the process the exact same way we taught over the last 2 weeks in this lab, which those videos are up on YouTube as well. And so what I looked at here on the 5 minute chart as I was kind of coming into the close, because we no longer had a 1 hour trend. If we no longer have a 1 hour trend, I shouldn't be anchoring against the 1 hour trend. Does that make sense, everybody? And guys, the very second we broke that 61% barrier in that trend line, the 1 hour trend's dead to me. Not until the shorter time frames get short up. And so all of a sudden, what do we got brewing here on that shorter term trend? We have a head and shoulders formation. Left shoulder, head, slowing momentum, right shoulder, right there. Now, I kept saying, once you get above 55, I was talking in the stream, once you get above 55, I'm getting into a partial. And the reason I'm getting into a partial above that 55 on the ES, guys, was because that was the confirmation of the neckline in the head and shoulders reversal. And I only did a partial because I can't do full position on a 5 minute chart. That's not me. That's not me in any capacity. I'll go full position only when I have an edge on the 1 hourly trend and I have momentum. And so I'm building into a position basically, because once we broke trend and no longer had a trend, the market is currently in the development process of a trend. Does that make sense, guys? And does that help you understand pullback analysis? Once again, shallow pullbacks, you can be aggressive. Standard pullbacks, a little bit less so. Deeper pullbacks, they have to confirm through confirmation. Anything underneath deep, you no longer have a trend, which means you have to look at it through the lens of continuation versus reversal. And I thought today, despite the volatility initially, that kind of threw off the pullback against that 1 hour trend. But I thought it was a pretty good lesson today on the patience needed and the confirmation needed to really kind of track pullbacks. And we never got a confirmation all day long, never got confirmation against pattern until we got the head and shoulders formation at the very low point and then got that to break back up above the neckline. And with that said, guys, that is how we navigate the bullish retracement and the depth of the retracement conversation. 3 key levels. Once you get underneath the deeper level, you no longer have a pullback, and you have to see through the lens of pattern development through either bullish reversal formations or bearish continuation formations. Now, did you guys enjoy the lab today? Awesome. Awesome. Every Thursday, 4 p.m., right after the close, ladies and gentlemen, we do it every single week. Thursday. And if you want a reminder every single week, okay, every single week, give me 1 second. Give me 1 second. You can hit this link that I just put in chat, okay? So go ahead. This is a weekly reminder. So it's not just for today, it repeats every Thursday. But go ahead and hit that, and you will get a reminder every week when we go live. I like my reminders, so there you go. Also, with that said, guys, if you want, and again, I love you so much if you do, give us a nice little review, 5-star, if you will, for all things BluSky trading, BluSky education there in Trustpilot, as we look to compete against some of those big dogs out there as well, because we love all things BluSky here, and we hope you do as well. Does anybody have any questions on anything we covered today in the lab specifically? Well, thank you so much for coming out each and every week and supporting the BluSky Lab, ladies and gentlemen. This is Coach Matt. Really appreciate that. Boba, why you draw the fib? Why we don't draw it starting at the low of August 1st? Okay, now, are you talking about the low point here? Like right here? Because I did draw my trend line there, correct? Okay. Now, What I was trying to do, Boba, is I was trying to track the pullback, not from the existing trend. I was trying to track the pullback from the existing wave in the trend. Remember, a trend is a series of waves, higher highs, higher lows, higher highs, higher lows, otherwise known as motive waves and corrective waves. Motive waves, corrective waves. Corrective waves are a correction from the motive wave, not the completion of the trend. Does that make sense, Boba? Yeah, so that's why. Now, if and mind you, that doesn't mean there isn't a longer term trend, say on the 4 hour chart here. Like if you come to the 4 hour chart here, by the way, we would be going into wave five on the 4 hour chart. But if you look at the 4 hour chart here, 1, 2, 3, 4. So it's even fairly consistent on the 4 hour chart, I would say. But yeah, when you're tracking the depth of the retracement specifically, you're identifying the pattern within the retracement, which means you are basically looking at the previous motive wave, not the completion of the trend. It's a good question, though. It's a very good question. Awesome. Awesome. All right, guys. Next week, I'll tell you what, on Monday in Power Hour, at the end of Power Hour, I'm going to have 3 topics selected for the lab next week, and you guys get to pick which topic. How's that sound? At the end of Power Hour on Monday, I will have 3 topics. You guys get to pick the topic, and I will prepare an amazing presentation for you guys next week. And I'm going to do that because you guys gave 5-star reviews on Trustpilot because you're the best. Love you guys. Thanks, everybody. Have a wonderful, wonderful rest of your day. And do not hesitate to hit me up, anybody, if you need me. Add me as a friend. Hit me up if you need. Later, team.